In this video, we are going to take a look at common terminology used when trading and investing in the markets. We will discuss bullish versus bearish markets, and we'll also take a look at a few examples. Stick around to learn more. Welcome back to the Trade with Resolve channel. Let's go ahead and discuss the difference between bullish markets and bearish markets. Bullish or bull market versus bearish or bear market. When you hear the term bullish or bull market, it simply means that the stock price or the security price is making higher lows and higher highs. So the price is simply increasing. When you hear the term bearish or bear market, it means the security price is making lower lows and lower highs. Therefore, the price is declining. Quick note, a security can be any financial instrument. For example, stocks, options, the futures market, the forex market, etc. Let's head over to a candlestick chart to take a look at a few examples. Alright, so we are currently viewing Microsoft, the 15-minute chart, so each candlestick represents 15 minutes of price action. This would be considered a bullish trend. If we take a look at the lows of candlesticks, notice that the lows of the candlesticks are getting higher and higher and higher. If we take a look at the highs of candlesticks, the highs are getting higher and higher and higher as well. And so this would be categorized as a bullish trend. And so whenever the trend is bullish, you can consider taking long opportunities. Now, this doesn't mean that you can't take short opportunities when the trend is bullish. There are a number of strategies which we cover in our academy, but as a beginner, it's important to consider trading with the trend at first in order to place the odds in your favor. And so when the trend is bullish, you can consider taking a long opportunity when the price retraces. And so again, this would be an example of a bullish trend because the stock is making higher lows and higher highs. All right, so we are still viewing Microsoft, the 15-minute chart here. And so at this point of the chart, the trend would be considered bearish. If we take a look at the highs of candlesticks, the highs have gotten lower and lower, and the lows of candlesticks have gotten lower as well. And so again, this would be considered an example of bearish price action because the highs and lows of candlesticks are getting lower and lower. And so this is still Microsoft, right? And so one thing to keep in mind is trends change. No trend can last forever. We hope you found value in this quick lesson. If you did, please be sure to give the video a like. Also, feel free to check out our free market crash course if you're new to the markets. You can find the link in the description box below. Thank you so much for watching, and I look forward to seeing you in the next video.